Welcome back to my channel, ladies and gentlemen. I am so delighted to welcome you once again to my channel. So in today's video, I'm going to be sharing with you another powerful strategy that you can use to generate money from the forex market. So in this video, I'm going to be teaching you how you can use the moving average to identify the direction of the trend. Remember that the trend is your friend and you are meant to trade in the direction of the trend. So how do you identify a direction of a trend? How do you know whether if a trend is going up or if a trend is going down? So that is what you are going to learn from this video, because I'm going to make it very simple. Remember, in all my videos, I try to make everything look very simple so that you understand how to trade the forex market. I don't want to complicate things, especially for newbie, those that are joining the forex industry newly. I don't want to make things complex. That is why I focus on simplicity, so that everyone will understand how this business works. My goal, my aim is to make you profitable in the forex market. We know that the forex market is very profitable. So many people are cashing out every day. So many are losing their money every day. I want you guys to be in the line of those that are cashing out and not those that are losing. So that is why I always advise you to backtest every strategy that I share with you guys on a demo account before you can trade it on your real account. Remember that every strategy that I share with you in this channel, I have personally backtested them and they work for me. That is why I'm sharing it with you guys. But for the fact that they work for me doesn't mean that you should just go and trade it in the real market. First, backtest it in your demo before you can trade it in the real market. That is a very powerful advice that you need to take. So back to business. We're going to be looking at the moving average, and I'm going to show you how you can use the moving average to identify the direction of the trend. First, we have to know that there are several moving average. We have the simple and we have the exponential moving average, right? So what we are going to be making use of is the exponential moving average. Why? Because they give us information on what is happening in the market, right? Not what has happened in the past, what is happening right now. Because what differentiates the exponential moving average and the simple moving average is that the simple moving average tells us what has already happened in the market, what has happened many days, 2 weeks, 1 month ago. That is what the simple moving average does. But the exponential moving average tells us what is happening right now in the market, right? It places more weight on data that is happening in the market. That is why many price action traders always make use of the exponential moving average. So for you to be able to trade this strategy very well, you should first and foremost look at your money management skill. Like I said, don't risk more than 1 or 2% of your capital. Very important. Don't risk more than 1 or 2% of your capital whenever you are trading the forex market, because not everything is 100%. So don't lose everything, right? So now, how do we trade the moving average, right? You simply trade the moving average during a trending market. You don't trade it during a ranging market, right? So this strategy that I'm sharing with you works only during a trending market, right? When the market is trending up or trending down, that is when this strategy works, right? The strategy only works during a trending market. So that is why it's advisable for you to understand price action before you can venture into forex trading. Price action still remain number one in forex trading. That is why whenever I teach you indicators, I always include price action, because price action still remains the number one in forex trading. So no matter what, you must learn how to analyze the market using the naked price action, right? So let's go back to what we're talking about. So the moving average is one of the popular indicator that many forex traders are using to analyze the market, right? And what is a moving average? A moving average is a line, a dynamic line that forms either support or resistance level. So we are going to use it to trade the forex market. So pay clear attention, right? Now there are three different kinds of trend in the market. We have the strong trend, we have the healthy trend, and we have the weak trend, right? In the strong trend, you make use of the 20 exponential moving average. In the healthy trend, you make use of the 50 exponential moving average, while in a weak trend, you make use of the 200 exponential moving average. Now, the 200 exponential moving average tells you that the trend is taking longer, right? It tells you that the trend is taking longer and the pullback is always deep, right? Why the strong trend tells you that the trend is very strong. So these are the things that you need to understand whenever you are trading the moving average. Now, there are different types of traders in the market, right? We have the intraday trader, or you can call them the daily trader. We have the scalper, we have the swing trader, and we have the position trader. So before you venture into the forex market, you must belong to one of these types of trader. You either be a scalper, you either be a day trader or intraday trader, you either be a swing trader or you be a position trader. I know that no retail trader is position trader. The people that are always position trader are the big banks, right? The smart money. Those are the people that are always in the line of position trader. Retail traders are always day traders and swing traders, right? So you only pick the one that is conducive for you. You pick the one that does well for you, and you pick the one that your lifestyle can adapt to, right? If you are a person that has other jobs that you are doing, you're a busy person, you understand, you have different jobs that you are running around, you can go with the swing trading, or you can go with the position trading, right? But if you don't have any other thing you are doing that you want to trade the market full time, you can go into day trading and scalping, right? So these are the things you need to understand about the forex market, so you know what you are, whether if you are a scalper, if you are a day trader, if you are a swing trader, or if you are a position trader. Remember that the scalpers make use of the lowest time frame, like the 1 minute, 5 minutes, and the 15-minute time frame, while the day traders make use of the 15-minute, 1 hour, and 30-minute time frame, while the swing traders make use of the 1 hour and the 4-hour time frame. Then the position traders make use of the daily and the weekly time frame, because they are looking at the longer period of the market. So these are things that you need to understand before you venture into trading. You need to understand who you are. Are you a swing trader, position trader? Are you a day trader, or are you a scalper? So when you are able to understand this, and you also know the types of trend, the weak trend, the strong trend, and the healthy trend, then we can now move into the moving average, and then it tells you how you can plot them on a chart. So now let me give you an example of how a moving average looks like. Now, if you look clearly on the chart, right, you can see that the trend is up. So whenever the candlestick is above the moving average, it means the trend is up. And whenever the price is below the moving average, you know the trend is down. Now you can see that the price is above the moving average, telling you that the trend is up. So what do? You only trade in the direction of the trend. So whenever you discover this type of market, please don't sell. Know that the market is in a trend because the prices, the candlesticks are above the moving average, telling you that the market is heading up, right? Now let me give you another example again. Now this tells you that the market is in a downtrend. Why? Because the candlesticks are below the moving average, right? They are consistently below the moving average, telling you that the market is clearly in a downtrend. Because without this moving average, you will not know where the market is going. But for the fact that you have plotted this moving average, it tells you that the market is heading down because the price, the candlesticks are below the moving average. So how do you trade using the moving average? You simply trade the retracement. Whenever the price retraces to the moving average, you place your sell trade. The same thing is applicable to the uptrend. Whenever the price makes a retracement to the moving average, you simply place your buy trade. Whenever the price makes a retracement again to the moving average, you simply place your buy trade. So these are how you trade the moving average, and you can use them to identify the direction of the trend. Another way you can use the moving average is trading it as what? As a crossover, right? Whenever the shorter moving average crosses the longer moving average, you take your trade. So these are the things that you need to learn about the moving average, because this single indicator is so powerful because everyone is making use of it. For the fact that we are trying to identify the direction of the trend, that is why we are making use of one moving average. But if we want to trade the crossover, we can make use of two moving average. We can use the shorter and the longer, right? As a day trader, we can use the 20 and the 50 moving average, right? And wait for the crossover. Whenever the 20 moving average crosses over the 50 moving average, we know that the price have changed direction. We can also use the 5 moving average and the 20 moving average, right? As a day trader or as a scalper. Why as a position trader or swing trader, we can make use of the 200 moving average and the 50 moving average. That is, whenever the 50 moving average crosses over or crosses below the 200 moving average, we know that the price have changed direction. So these are how you trade the crossover. So like I said, you only trade the moving average during a trending market. You don't trade the moving average during a ranging market. So like I told you before, that we have different types of trend. We have the healthy trend, we have the strong trend, and we have the weak trend. Let me give you an example of how these trends look like so that you understand what I'm talking about. So first, we are going to look at the strong trend. Now this is an example of a strong trend, right? This moving average is the 20 exponential moving average. This is a strong trend because the price is heading up. So, and it's only testing the 20 moving average. So how do you know that the market is in a strong trend? When the market is testing the moving average, the 20 moving average consistently, it means the market is in a strong trend. Like now, if you look clearly, you see that the market is in a strong uptrend because the market is clearly testing the 20 exponential moving average. So you can see that the market crossed over the 20 moving average, then made a retracement and tested the 20 moving average and continued heading up. Came back here again, tested the 20 moving average and continued heading up. Came back here again, tested the 20 moving average and then continue heading up. So if you identify this type of market, you wait for a retracement to the moving average, which is the 20 exponential moving average, for you to place your buy trade. Like if you open your chart and you identify this type of market, you simply plot in your 20 EMA and then watch the price action, right? If the price comes back to test the 20 EMA, you simply place a buy trade, right? And if the price goes up again and still come back again to test the 20 EMA, you still place another buy trade. And make sure that your stop loss is a little bit below the moving average, because you can see according to price action, the price have not been able to break through this moving average, telling you that the general condition of the market is uptrend. So you are only trading in the direction of the trend. Now let me give you another example again. So this is an example of a healthy trend. A healthy trend is when the price is respecting the 50 EMA, that is the 50 exponential moving average. So this line you are seeing now is the 50 exponential moving average. You can see that whenever the price comes to the 50 exponential moving average, it tends to bounce back, right? This tells you that the price is respecting the 50 EMA. And whenever you discover that the price is respecting the 50 EMA, it means that the market is in a healthy trend. So you can see the market is clearly in a downtrend, and you are meant to trade only in the direction of the trend. Don't ever trade against the trend. Like now, the market is in a downtrend. Please, you don't have to buy in this type of market. Some trader will say, wow, look at the market is going up, and they will not place buy, right? They might place their buy here and put their stop loss somewhere below here, right? The market just goes a little bit up and then reverse back and hit their stop loss, right? This tells you that in a downtrend, you only trade in the direction of the trend. In an uptrend, you only trade in the direction of the trend. Don't ever try to trade against the trend. So this 50 EMA tells you that the market is in a downtrend. Why? Because the price, the candlesticks are below the 50 EMA. So whenever the candlestick or the price comes to the 50 EMA, you place your sell trade. Whenever it comes to the 50 EMA, you place your sell trade. And make sure that your stop loss is a little bit above the 50 EMA, so that even if the price cross the 50 EMA little, it cannot get to your stop loss. So this is how simple you trade using the moving average. So this is the 50 EMA, and I hope you understand everything that I've taught you in this video. Like I said again, the 50 EMA means that the market is in a healthy trend, and you are only meant to trade in the direction of the trend. So whenever the price goes down and makes a pullback to the 50 EMA, you place your sell trade and then put your stop loss a little bit above the 50 EMA, right? And then you can be able to ride this trend. If you want to add more position, you can wait again for the price to make a retracement to the 50 EMA for you to place your sell trade again. So the last type of trend we have here is known as the weak trend. The weak trend is when the price is respecting the 200 exponential moving average. That is what we mean by the weak trend. In the weak trend, the pullback is so deep. That is why during a weak trend, you can still make use of the horizontal support and resistance line, right? You can make use of the moving average, the 200 moving average, and you can also make use of the horizontal support and resistance line. So during a weak trend, you can see that the price is always above the 200 moving average. So whenever the price is above the 200 moving average, it tells you that the market is in a weak uptrend. And whenever the price is below the 200 moving average, it tells you that the price is in a weak downtrend. So what do? You simply plot your support or resistance line, right? And wait for price to come to your area of value, which is the support or resistance line or the 200 moving average. So in this case, you can see the market is clearly going up, and this is the 200 exponential moving average. This line you are seeing now is the 200 exponential moving average. So you can simply plot your support line here, a horizontal line here, which will act as a support level, right? While this one acts as a resistance level. So you can see that once you plot a line below here, a horizontal line below here, that line now acts as a support level. So along with the 200 moving average, you now have a better confidence to trade the market. So when the market comes back to this 200 moving average and the horizontal line, you can simply place your buy trade with confidence, because you know that the price has approached the support level, and whenever the price comes to a support level, you are meant to buy. So that is why I said you can make use of the horizontal support and resistance line alongside with a 200 exponential moving average during a weak trend, because clearly the market is going up but the market trend is very weak. That is why I say the pullback during a weak trend is so deep. Like now you can see the market was going up and this is the pullback. The pullback is too deep, right? This is the pullback, is too deep, and this is the uptrend. This is the pullback again, too deep. So if you discover that the market is in an uptrend and you say, wow, look at the market is in an uptrend, and you place your buy trade maybe somewhere around here, right? You place your buy trade somewhere around here, and knowing fully well that the 200 moving average is far away from where you place your buy trade, definitely the price will make a retracement and hit your stop loss, because the retracement is too deep. And if you decide not to place a stop loss, I don't know what may happen to your account. You might blow that account. So that is why you are not expected to place a trade whenever the price is far away from the moving average, whether it's a strong trend, whether it's in a weak trend, or whether it's in a healthy trend. Make sure that you only place your trade whenever the price comes to the moving average. Like now, this is another example. Now just watch this one. Now clearly see that the market is in an uptrend, right? The market is in an uptrend, and you see that the 200 exponential moving average is far away from this market. It's far away from this market. If I were you, what I would do is to stay away from the market and wait for the price to make a retracement, because if you check the previous price action, you can see that the retracement of the price is too deep, which tells you that the market is in a weak trend. So you look at the previous example of what happened in the market, you can see that the market is in a deep pullback, right? And you saw this move, right? What you do is you exercise patience, because the 200 exponential moving average is far away from the market, from the price. So you have to be patient and wait for the price to make a pullback, right, for you to place a trade. But if you are an impatient type of trader and you saw that the market is going up and you say, wow, the market is going up, and they say that the trend is your friend, let me join the trend, and you place your buy trade maybe somewhere around here, maybe place your buy trade somewhere around here, because you saw this rally up, you tell yourself, wow, the market is in an uptrend, let me place my buy so that I can join the trend. You place your buy trade here. What happens? The market goes a little bit and then start making the retracement. You can see how deep the retracement is. And what happened? Once the price gets to the 200 moving average, it reverses from there and the uptrend continues. So if you place your buy trade here, definitely the price will hit your stop loss, because I don't know where your stop loss will be. Because if you place your buy trade here, definitely I don't know where your stop loss will be, because this is the support level, and I told you are expected to place your trade at a support or resistance level. But for the fact that you place your trade somewhere here, the support level is far away. So even if you say you want to put your support level here, it's too deep, it's too far, looking at the time frame that you are using. So that is why I always advise you that you should look at the trend and know the type of trend that you are trading in. Are you trading in a weak trend? Are you trading in a healthy trend? Or are you trading in a strong trend? So you know the type of EMA that you're going to plot. Like I said, if you are trading in a weak trend, you plot the 200 EMA or use the support and resistance line. If you are trading on the healthy trend, you make use of the 50 EMA. And if you are trading on a strong trend, you can make use of the 20 EMA. Remember that during the healthy trend, the support can become resistance. So you should be able to know how to identify the trend, know whether if the trend is in a strong trend, or if the trend is in a healthy trend, or if the trend is in a weak trend. These things are very important whenever you are trading the market, because as a trend follower, Your job is to identify a trend and know the direction of the trend so that you can be able to ride the trend. And like I said, the moving average can help you to identify the trend and also help you to know the direction that the trend is going. If the price or the candlesticks are above the moving average, it means the trend is in an uptrend. And if the price or the candlestick is below the moving average, it means the trend is heading down. And what do? You wait for a retracement. For instance, if the price is heading up, you wait for the price or the candlesticks to make a retracement to the moving average for you to place your buy trade. And if the price is heading down, you wait for the candlestick or the price to make a retracement to the moving average for you to place a sell trade. So these are the ways you trade the moving average. This is how simple this strategy is. So if you learn and master this particular strategy that I've taught you, you'll be able to make consistent income from the forex market. So like I say, go and backtest this strategy on your demo account and see how it works, because I've already backtested it, I've used it, and it's profitable for me. So that is why I want you to backtest it in your demo account before you make use of it in your real account. So if you do these things that I've just shared with you, you'll be able to trade profitably in the forex market. So ladies and gentlemen, that is all I have for you on today's video. If you love this video, give us a like, subscribe to this channel for more educative content like this. Don't forget to come back for more updates. I still remain my humble self, Austin Ikeru, and you all are welcome to my channel, Ostino FS. For my new subscribers, please, I want to urge you to come back for more content, because I'm going to give you more educative content in this channel. So please subscribe, come back for more, because I'm not going to disappoint you in this channel. I'll see you again in my next update. Bye.